Welcome to yet another episode of Reinventing Finance with my charming co-host, Tom. Tom, how are you today?
Thank you very much, Nick. I'm fine.
And still charming. Great.
Yeah, still charming.
We are not alone. As usual, we have a guest with us. George, welcome aboard.
Thank you very much. Look forward to a conversation today.
For those of our listeners or viewers who the name doesn't pop out already when they see you in the show notes, why don't you briefly tell us who you are and what the hell you're doing?
Definitely. So I am based in Asia, based here in Singapore, and have been in Asia for now about 13 years, all around the insurance space. So Hong Kong, Singapore, Indonesia, back to Singapore, kind of charting the territory here. First decade in insurance proper in around the corporate space, and then the last half a decade in the Insurtech space with my own Insurtech association when we first started in around 2015. Then had run my own early stage startup, and now with Zhong An as their head of commercial for Zhong An Tech.
Maybe because Zhong An is anyone who's ever seen a consultant pitch you about how to get your house in order, there needs to be Ping An and Zhong An. Just needs to be on that slide. Otherwise, insert any named branded insurance consultancy here. You haven't done your job right. So could you just briefly, but maybe for Zhong An is obviously very prominent in Asia. A lot of our listeners are from Europe. So maybe what's Zhong An? What's the relationship with Ping An? What's Ping An for those of them who still think that Allianz is the big elephant in the room? And what's the difference between Zhong An and Zhong Tech? Or Zhong An Tech, sorry.
Sure. Yeah, let me unpack it a little bit. So China has been a very interesting space when it comes to the insurance innovation. I would say, like, if you look back something around 10 years ago, probably, it was very much a very unexciting market when it comes to insurance. It was, if you look at a lot of the decks from 15 years ago, China was kind of like this by the way thing. And I think that digital engine really kickstarted the whole innovation there. And I think because of the convergence of all the forces, it really catapulted the space into a very prominent place. So Ping An was one of the existing players, and I think they took advantage of this growth. And they had armies of agents. They digitized those and really kind of springboard themselves to be, I think, the leader in insurance globally. From kind of being very much secondary. Zhong An was a little bit different because it was started as a JV and started by Ping An, Alibaba, and Tencent. So very prominent three major digital players and insurer to say, okay, how do we experiment in the digital insurance space? Because it was such a new space. They kind of decided to create this, and it was largely to service the online insurance space, with Alibaba being the captive ecosystem. And during that time, it really took off, and I think it was 2013 where kind of the explosion of all things digital started to take place in China, and lifted the insurance and Zhong An together with it in a very, very interesting place. If we fast forward it now to last year, the numbers, I remember seeing some of the public numbers coming out. It was something like $3.2 billion last year is how much Zhong An did in premium in China. So it is pretty staggering numbers considering that they kind of didn't exist 10 years before that. And that growth continues, and largely driven due to the tech innovation, product innovation, and the channel innovation. So all those kind of three things combined really continue kind of pushing it and growth story behind that. So it is, I think a lot of the people, either they hear about it and they say like, wow, this is the biggest insurtech in the world, but maybe is a little bit kind of contained to China market, so it's not really as visible to a lot of others, and maybe not as prominent outside as Lemonade, but it is very, very massive. So the Zhong An have gone IPO a couple of years ago, and they're doing well. And one of the biggest investors at that point was SoftBank as well. And when Zhong An started looking at international markets, they decided that growing as an insurer was too slow, and actually growing as a tech company made a lot more sense. And that's where Zhong An Tech was born, and it was born as a JV between SoftBank and Zhong An. So we have both of the shareholders that are very prominent. But at the same time, what's unique about this approach is that the SoftBank allowed us to work with their portfolio companies and gave us access into the digital ecosystem that ensues. So sorry, that kind of is a bit of a history and the background there, but hopefully that gives a little bit of perspective in terms of kind of where we are and who we are.
No, absolutely. I think what's interesting is that just a couple of things. Is number one, so Zhong An as an insurance company started, I believe, Alibaba, Ping, and Tencent, I believe. So it would be almost akin to if you were to take European brands. What if Allianz, Amazon, and Facebook, I don't know, decided to launch an insurance company? That would be Zhong An. So that, first of all, seemed like an interesting proposition because it combined product with access, obviously, right? And then Zhong An, we had access, probably, I don't know whether exclusive or private, but certainly, let's say, preferential access to the Alibaba ecosystem, etc., and work through embedded insurance. And I believe a lot of it was kind of delivery insurance. Is that correct? That was kind of the nucleus of how that came to be. Now, the interesting thing, again, European insurance companies were now so, it's my tech stack, so I'll use that to differentiate myself against competitors, and I need to be deeply. But you guys did another move, and you said, well, actually, technology is easier to internationalize due to regulation, but also let's make a business model out of it, right? Let's kind of make. I assume you run a lot of the technology for Zhong An, but there's different angles to the customer. There's different trusted. You can't have them also. Why not make sure that you'll always have a leg up on the technology because you're delivering technology to everyone else. The kind of Netflix, AWS analogy, co-opetition. But I think it is a really interesting example. Is that a fair summary, or did I gloss over anything there?
No, I think that's exactly spot on. So it is about taking a bit of a magic dust that made Zhong An tick and productizing it for the rest of the world. And I guess we've seen that China in some ways now is somewhere between 3 to 5 years ahead of a lot of other markets when it comes to this digital insurance space. So you basically have that constant stream of insights that you're able to productize and be ahead of the market in a way that kind of allows insurers to go where they want to go without having to continue rebuilding and the tech stack and all the stuff that comes with that.
Is it another thing, and I don't know whether that's true, but you've seen this. Another thing seems to be, though, that in embedded insurance, aside from products and APIs and technology, capital, like joint venturing, seems to be a way to secure access. It seems like a big boys club because there's not anyone who can just go to SoftBank and say, let's create a joint venture and then give me preferential access to these tier 1 startups in the embedded space. Is that also part of the playbook. Get in touch with the big players, create joint ventures to entrench. I mean, it's banks have done this. You know, it's an old trick, but old tricks are good because there might be a reason why they've been around for so long. Just something to take notice when you try to win the embedded space with your fancy API, that some people might play a different game, which you might think might be unfair.
I do agree with you on that. Is that I think, again, taking the experience that we've had in our ecosystems in China, when I think right now we have about 500 ecosystems, but I think when we started to internationalize that, it was about 300. We found that there's very little stickiness when it comes to these ecosystems, unless you kind of have a closer alignment right from the start. So that was one of our learnings. So when we went to international, we said, okay, especially when we work with the big guys, let's start as a JV. And this is the playbook that we've deployed. So we have a JV with ride sharing, biggest ride sharing super app here in Southeast Asia that's called Grab. We have another one that we recently announced that is in the travel space with Klook. And we also have another one with the payments platform. So with that approach, basically what we did is we said it's a value maximizing type of JVs, because the platforms themselves are looking at how do they start insurtech businesses. They see that as a strategic value increaser for their valuation. So they want to start it, and then they can use our technology, they can use our product expertise to really quickly get going. And then obviously we win by partnering with them. SoftBank wins because they have kind of a hands in both of the pots, and everybody kind of a win-win strategy. But underpinning it is still ultimately the technology that is able to accelerate the go-to-market for these partners. But having that JV basically helps to create the long-term alignment and value kind of a sharing. Yeah. So definitely.
That's so. When you say okay, so and then. You've already answered my question around, what Zhong An Tech is doing with the ecosystem partners. You know, they can then build their own MGAs, and they can use the technology. If you have licenses, they can use Zhong An balance sheet. And, there's probably various shades of gray depending on the country, the product line, and, the following infrastructure to service all of these products. Do you guys... have your eyes on Europe or the States, or is it still, what's that kind of strategy or focus looking like?
Yeah, the first major regions for us were Southeast Asia and Japan. So they've grown to a fairly good maturity, and they still continue to grow. Europe is, I think, is something that we find interesting. We're getting a lot of inbound interest from the insurers saying that we see what's happening in Asia. Asia is seen as kind of at the foray of the digital insurance, embedded insurance, and the stuff that's coming up after that. So we think that there is definite opportunities for us to bring it to the insurers there. And I think that comes back to maybe my earlier point. So I'll kind of emphasize the stuff that we're doing in the digital platform space. But we always think about, how do we bring this infrastructure to the insurers as well? So how do we allow them to work with the digital platforms? So as Zhong An Tech, we don't take any risk on our balance sheet. Mm-hmm. We don't want to be an insurer or even an MGA. We basically want to be that infra that moves the risks around, that helps the embedded space to really flourish. And at the same time, kind of bring all the right parties together. So this is where we have a solution for the insurers, we have a solution for the platforms, and then kind of how they can work together in a more efficient way.
And do you have, when you say interesting, are there any things live yet in Europe? Anything you can share, or in which direction? Anything you can share? Period.
Yeah, we have something there. We have our first client that we're working with. I don't know if I can share the name yet. I don't think that's public yet. But I think you should be hearing about it and definitely in the next couple of months. we were excited about the European market. I think that we can definitely sense that there is kind of a tipping point when it comes to the space, and a lot of it, I think, is also about digital platform realizing that there is opportunities in the insurance space, and there's a fairly versatile product. So I know that there's kind of a early experiments going, and I think now there's that first set of maturity. We've seen a very similar pattern happening in Southeast Asia here as well. So when we started with Grab, for example, nobody else was doing it in that space. And last year itself, I think we did about 200 million policies through the Grab ecosystem. So that kind of even though it's micro embedded policies, it's still the volume is ramping up. And because of the success of Grab, then everybody else gets excited and say, oh, actually, this is a model that's working. You know, why don't we add insurance? And then it kind of goes from unicorns down to kind of a Series A startups. Everybody gets excited about it and says, you know, this is a space that's going to be flourishing. And I think the similar pattern is happening in Europe as well.
Who do you consider, and I think I would love to get your view just on how to go to market, how to prioritize, you know, anything that's not proprietary, obviously. But let's say, who do you consider your competitors?
I think that's a good question. You can drill down in different categories and say that there's competitors. I think for us, what we've seen so far is the biggest competitor is status quo. And most of the kind of friction right now, we're still finding that on the insurer front, to basically say like, okay, we don't want to do any product innovation. We launch our first product, but we don't want to continue iterating it. So that's where I think the biggest thing that we're chipping away at through the education, through kind of the success of the use cases that we've launched. I would say that's probably the biggest competitor to what we're doing right now. But I think that is starting to change fairly quickly as well.
I mean, fair enough. And I guess I think you've kind of hinted at it, but would it be fair to say if you kind of had a go-to market? I mean, you said you help insurers, you help platforms. Now, embedded insurance is not a white space anymore, right? I mean, it's almost like a gold rush. No one really knows exactly how to get there, but any insurer, even small mutuals, right, who don't want to invest a single dollar into it, think that embedded insurance, at least, you know, if there was an opportunity, they would consider it. So let's say there is a market where embedded insurance programs are working. You have, you know, some insurers carving out their niches. You have some insurtechs carving out their niches. If you'd say, okay, what's the battle plan for Europe? Is it to kind of go, okay, let's go through the insurer angle, right? Who have potentially exclusive agreements with big banks or other kind of ecosystems, etc. Or is it to go into a white space of embedded insurance that's target Series A, Series B startups, which might be overlooked and so will grow? Or is it, you know, heads down and say, let's kick out Deliveroo. Let's win them over. Let's explain to them that they don't need to make someone else's Series D multiples work. You know, let's go to Deliveroo, let's build they build a captive MGA, you give them all the ideas and you just give the technology and you say, thank you, Zigo cover, I don't know, right? You capture those multiples. Are those, how do you approach these things?
I think that's a very good question. Ultimately, I think we still function as a startup in that sense. And even though we're now close to 800 people, I think the approach that we've taken, it is very iterative in the nature and it's very experimenting in the nature. So I don't think there is a specific playbook that we've kind of succeeded at to say it's option A, option B, or option C. It is very much about finding where the opportunities are and quickly iterating on that. So I think so far we've seen that the most of the interest that is coming to us at this point is from the insurers. And I think that's natural because kind of, I guess we is through the Zhong An affiliation and all the stuff that we've done there, that's probably much higher through probably the consulting networks that you mentioned earlier. It's still on the kind of on the radar. So we haven't seen as much, let's say, interest from the online platforms yet. But I think as we start to build that visibility, I think that there's probably going to be, one or the other will start to take off, and then probably that kind of creates that kind of the network effect that takes place.
And I think, I mean, honestly, I think that's the difference between kind of a startup that looks to find opportunities, and again, someone who never had to find an opportunity and just put some boxes in and say, this is our strategy now, please execute on the strategy. And, if it doesn't work, you haven't executed well on it. So I think a opportunistic approach is really helpful, especially since they are mutually reinforcing, right? Understanding more about the ecosystem or the insurers helps both sides. On the other hand, it's also difficult, at some point you run, do you have, what I'm getting at is, are there any hurdle rates where you say, sure, we're going to look at opportunities, but let's, to be honest, we're not interested in a 50,000 or 500,000 or $1 million, what's that hurdle rate where you kind of go, listen, we're happy to sit down. We're also happy to even start a POC, but what you, insurer or startup, need to appreciate is that this is going to be interesting for both of us if we get towards $1 million ARR, commission income, whatever that is, right? License income. Do you have some of those kind of hurdle barriers, and do you communicate those?
Yeah, so that's, I think, another good question. I guess for us, the advantages that we're coming from Asia, and in Asia, everything is kind of much more lean in that sense. So for us, we're coming in with the mindset that as we work with the partners in Europe, we are open-minded, especially as we work with the first few partners. We're there learning as well as we go. So in that sense, we understand that in Asia, when we're talking about solutions that are $100,000, in Europe, people say it's $1 million, right? So there's kind of a magnitude difference. But at the same time, we are coming in with the mindset that to say we are there in the first few opportunities. We definitely going to be learning. We have, I think, something that's unique and valuable to bring to the market. And I think this is kind of how we're approaching it. And we've seen so far there's general very receptive approach from the insurers. We're happy to share what has worked in some of the markets that we have worked in, some of the technology and some of the advancements. But ultimately, it all comes down to the type of problems that are in Europe, probably a little bit different. So I think there is definitely an embedded space, but there's a lot more in terms of transformation, in terms of kind of looking at the other segments. So we are coming in with absolutely open mindset to say, this is some of the things that we've built so far and that has worked really well in embedded space, but vice versa, we're very receptive to understand what kind of a market dynamics, what kind of a market problems could fit or otherwise we can build to that as well.
I think that's an interesting point, and maybe is there other similarities or differences that you could, and Europe, Asia, that only makes sense when you have a very high vantage point, and everyone, if you then kind of drill down. But from your discussions, and you've hinted towards one, I mean, I would assume that Western Europe, especially, or Europe, similar to the United States, has a much higher insurance penetration. So people are insured, right? They have decided to purchase their insurance in one way or another. And especially around, people don't like to change their behavior, and especially insurance is not this kind of high, not even a high friction product, right? Because it's such a low touch product, there's not that much friction either. Whilst in Asia, I would imagine there is, basically less insurance penetration, so less re-education. Are there other differences that you see, I don't know, in terms of concentration and aggregation of digital platforms, just in general, right? E-commerce user, I don't know. Are there other things which you find where, when you bring these analogies from Asia, and then you go into a discussion in Europe or the United States, or maybe they're different, where you say, okay, got it. We need to adjust for the local conditions here.
Yeah, I think there's definitely an adjustment that needs to be made. I guess the biggest difference that we find is that if you kind of look at the digital adoption and digital ecosystems, it seems like Asia is still kind of leapfrogging ahead in some ways, because a lot of the stuff that was built in Europe and States, it wasn't there in Asia. So people kind of right away, they go and they live on their smartphones. The first purchase that they do is a smartphone to kind of give them access to the internet and kind of all the social networking and all the e-commerce and all the kind of stuff that is taken off. So it is, I think, creating a lot more digital natives here. Even people who are in their 60s and the 70s, basically just there's no not living with the phone, right? So they kind of have to have that digital adoption, and we're seeing kind of a digital payments taking off. Digital identity is starting to come in a strong way as well, and all the kind of services surrounding it. So basically, big chunks of the economy is moving into the digital world, where I think in Europe it's still, that foundation of the economy is so strong that there's more inertia from the traditional space. So that digital space is probably a little bit further down, and it takes a little bit of time, further time to change the customer behavior. So it feels like maybe that there's a bit of a lag in terms of the digital. So what it also helps us is that we kind of see where things tend to mature and tend to progress. So for example, in Asia, the embedded space now is at the point of, I would say, like the early maturity. And what's really starting to take off is more like the omni-channel stuff. So people are saying that, okay, how do we move digital into more traditional products? How do we start to, instead of giving an iPad to an advisor, how do we actually create meaningful experiences that kind of entail people in it and advice, and not just at the correct places? And kind of how do we help customers to go through that experience of buying a bigger size product, not just a 30 cents product, but maybe a $1,000 product or $300 product in a kind of a more frictionless way. So that is kind of our early hypothesis, is that it is going to be different in Europe. I don't think that's really taken off yet. And the embedded space is probably right now is still going to be the big focus for us there.
So how, I mean, I was just thinking about, I call it kind of cross-selling or upselling, etc. Are there some hypotheses that are, so what are some themes that you've observed in the markets that you're active, that we should take note, right? How do you get from 30 cents to $1,000? Because that's really interesting. It's a good uplift. So are there any hypotheses that you have, hypotheses that have been validated or even falsified? Because people have tried cross and upselling, for a very long time in insurance. And whoever cracks that well can obviously create a positive flywheel, because you can do the POS products ever so competitive, and kind of keep the wheels turning.
Yeah, so I think the hypothesis that have been proven incorrect is that from the embedded, you can easily cross-sell to a larger size products, right? So that kind of a digital only journeys only work for a certain type of products that are very seamless, very kind of a easy no-brainer add-ons. And the analogy that I kind of currently have as a working hypothesis for it is that if you kind of buy things from the Apple App Store, right? For example, you can buy something that's $2.99 a month. That's fairly easy. You kind of just click yes, go ahead. But if you think about like let's say $1,000 CRM, you wouldn't just say like, okay, App Store, okay, I buy $1,000 CRM, just kind of swipe here. So I think similar thing that's happening in the embedded insurance space is that the platforms that have managed to secure a very significant volume, when they put the larger products, they're just kind of, there's no take up on it. And what we've seen work well in some of the early experiments is that cross-sell does require basically a human nudges. So basically you kind of think back about telemarketing, kind of having the people at the right places at the right time. So not a rocket science, but it's much more data-driven approach and iterative approach rather than kind of the more monolithic approach that was done before, where you kind of say, okay, here's a telemarketer and they're going to continue pounding the phones until kind of the face turns red. But in this case, what we find is that there is definitely a need for that trust element and for advice element, but it can be done in a much more data-driven way. And once you apply that, there is actually a very positive dynamic that comes in, and it can be done in the nth different ways. What has really taken off in China, and we think that this is a trend that's going to continue as well, is that you kind of have social media, so have the people kind of going on TikTok, becoming influencers, and from there's a kind of a natural progression where people trust you as an influencer talking about financial services, and then they kind of continue and they buy, but the digital experience is there so that when they're ready to buy, they can kind of go ahead and quickly buy it, and they can share it through QR codes, for example.
Yeah, I think there was one theme that I observed as well, and I think it's and anyone I talk to, and I think it's kind of once startups kind of IPO'd, and it's about getting the combined ratio close, right? Because that's what public markets want. But also anyone actually needing to deliver on partnerships rather than just collecting logos, right? I've heard this phrase once, and let's just call it affinity or partnership or embedded, because these terms are loosely held, right? That whenever you add a human element to the equation of an after sale or a bigger policy, the economics work better. Now, if you use technology to nudge at the right time, the right person, don't have double data entry, that I think seems to be the game, and that a lot of insurtechs who try to go direct but with as little advice as they're moving upstream, find that actually having a person talk to something that you feel it's quite complex, it's a high information asymmetry, it's very hard to experience, that having someone I trust explain that to me and guide me is actually really great UX.
Absolutely. And it's not different from, again, kind of the outbound sales for SaaS software, right? You have exactly the same approach where there's already an existing playbook, how you would sell a higher ticket items, and outbound sales development, and kind of things that are there, plus probably bringing kind of the right technology into create a very seamless process. I think this is really where we see kind of the future of that. So right now, there seems to be a bit of a bifurcation of this kind of like insurance. So you have one side, you have embedded space, another side, you kind of have a larger, I would call like an omni-channel type of experiences. And even we kind of have a slightly further iteration of the embedded, is that, for example, what we see in China is that Zhong An was doing kind of a very high frequency quotes. So a lot of the platforms in China have moved away from statically embedding products to basically renting that space for embedding something. And then I think the number that I heard recently, and it was fairly staggering number, is that basically, Zhong An was doing something in the order of like 10 billion quotes a day. Basically, so all the platforms would ping you and it would say, person A is taking a trip from point A to point B. Do you want to, offer them an insurance for this, right? And then you dynamically have to respond to say, okay, this is the how much I'm valuing this opportunity, and then just kind of input it there. So this is where the embedded space, I think, becomes very different from kind of how we think about it right now. Becomes a lot more dynamic, but it's also a lot less sticky, right? So it's no longer like, okay, I've secured this partner and this is the partner that for every single trip we're going to embed it. It becomes more like here, they're going to rent the space, they're going to maximize the value of each of those opportunities.
Yeah, oh, okay, so that's interesting. So you're kind of moving towards a little kind of real-time, I think insurance term, you would call it panel, where, in Lloyd's, you would have someone with paper, and, a panel, and, a couple of weeks later, you had everyone, and it's basically bidding, right? Yeah, I think that's really interesting. Do you, because there's one development we've seen, and it was actually, it came from and it's basically, how do you deal with customers who already have insurance, right? So I think that's one thing, discovery education about people who might not have, and let's take a very simple example, I don't know, warranty protection to, I don't know, contents insurance. Seems to be like a pretty easier than warranty to life insurance. Now, I think there's one element around people who don't have content insurance because they're kind of young, or they still live with their parents or something, and then you kind of push them once they leave the home. But what about people who already have contents insurance, who you now need to, switch from some other insurer? Do you find that is? Are you worried about both cohorts, or do you find actually within the embedded space you have more first-time buyers, so it's actually more the cohort of educating first-time buyers, or around switching people who've already decided on their insurance and probably are okay because they're not actively looking? How do you think about those two cohorts?
Yeah, I think for us, we're probably at this point more interested in the new buyers of products, and a lot of the stuff that we see in embedded space is, what do you call it, like unbundled insurance and coverages, or you kind of call it like a micro coverages. Is I think that's more the types of things that we're seeing. For example, in Asia here on this ride sharing app, you would kind of add the insurance to every trip, right? So you say like, here's a personal accident, here's the delay protection for the trip. So this is where I think your point about education, I would say that embedded should be so simple that you really don't need any education, right? It should be like a no-brainer extension to it, similar to kind of how we thought about last time, for example, with Apple Care, right? You don't think about it like, okay, I need to read terms and conditions on Apple Care and understand, how to file a claim. You just assume like, oh, okay, this is a good add-on. It's a little bit expensive, but okay, this is the only thing that you worry about. So, and I think this is, in some ways, that whole process of simplification of insurance that will happen inevitably, because right now it feels like insurance is still very much like a very complex legal product, and it's actually doesn't fit very well with the digital environment, whether you talk about it from kind of a pure digital or this like omni-channel experiences. Is still way too complex for it. But it's, what I find is that I guess there's not enough pressure for change yet to really kind of alter that product structures in a lot of the markets. So it's only in the markets like China where things are just so pressurizing and there's so much competition going on that you see that real kind of massive product innovation that's starting to come in. The rest of the markets are still relatively standard products, apart from the embedded space, which is, I think, this kind of like more of a disruptive place.
Yeah, and do you? So I think on the POS, I think that's the whole point, right? It's a point of need, point of sale. So it's a new consumption. I was kind of thinking as you go into more complex products, so you find that you need to convince people to change their insurer rather than educating them about the need of home insurance or contents insurance in the first place. I was kind of wondering about kind of the after sales, the omni-channel, the cross and upselling piece, and what your experiences there were and where you find the biggest challenges. Or is it just putting a salesperson in and explaining it in the right way and explaining coverages, and just making sure that they're calling the right people, so they'll still make calls until their ears turn red, but at higher conversion, because you'll give them a higher probability list of targets to call.
Yeah, I don't think we have an answer to that yet. Again, kind of where we're coming from is that in Asia, a lot of the insurance buyers are first-time buyers, so we don't really have that problem of kind of dislodging them from one insurer and helping them kind of to move to another insurer. In Europe, I think I don't have enough information to really kind of create a hypothesis around it yet. As I said, I think the embedded insurance space is something that will be probably the more logical focus for us to start with. And I think as we understand the dynamics better and we kind of see whether there's a real step change that can be introduced, then I think that we have a better place to make that hypothesis about, is it going to be a space that will be very vibrant, or is it going to be kind of hard to move people from the existing products that they trust, they're happy with, and can we? The real question, I guess, is can somebody create a 10x experience or 10x kind of a change in the traditional insurance space, which I think is difficult, at least right now, unless you're talking about like kind of something else coming in, which we can create a hypothesis about DeFi insurance or DeFi risk transfer method that creates something that's drastically different. I think it's hard to change the existing dynamics of the insurance to create a kind of a 10x for existing customers.
No, and I would say that everyone who've I think especially with insurance, it's just really tough to create a 10x experience on something which the customer simply doesn't want to experience. But kudos to anyone trying. I guess kind of moving to maybe two broader questions, which is to share your views on something, and maybe if you're kind of taking a step back and on the insurtech space in general, let's say from an either investor operator view, which of the insurtech plays, that kind of started, I don't know, 5 years ago, would you say have delivered on that promise, haven't delivered on that promise, and why do you think that is? And what do you think is insurtech? What's the next phase of insurtech? Which things would excite you? Where, or if you were an investor, where would you invest in insurtechs? Which theses do you believe in?
So I guess there's two questions in it. So one is what models have I seen working really well, and the second one is about if I were an investor right now, where I could kind of find money. So the first question about which models have worked the best so far, it feels like they're still largely in the distribution space. So I think this was a natural space to start to kind of get to scale where you were able to control various elements and control the customer experience and kind of push into it. It is still like, I guess if you look at the global space, there's still only a few examples of the things that have really managed to reach the scale. A lot of the insurtech have kind of struggled to gain to that space, I think, because of the variety of reasons, because of the constraints on the regulatory side. You have some legacy on the momentum on the insurer side that kind of didn't really take off. So you kind of see that you probably have kind of two hands and you can count the things that have really succeeded. So the likes of Lemonade and kind of a few things that have gone public in US, I think that was a kind of a lucky confluence of circumstances that they were able to reach a significant scale, go public on the back of some of the SPACs and some of the excitement that's happening. You guys have, I think, a couple of really good successes in Europe. And in Asia, we have a couple of startups that have also kind of reached into the space of at least 100 mil to kind of a unicorn status. But it is still, I guess there hasn't been a single model specifically that has really kind of nailed it. And I think this is where a lot of the investors have struggled as well to say, you know, if I were to bet on something, where would I put my money? You know, if I put a $10 million, kind of, how do I multiply it in this particular space? So it's still fairly evolving space, I think I would say, but it is a space that I think excites a lot of investors, not that they've seen that there is a potential to exit it in a meaningful way. And I think as an investor, if I were to look at the space right now, if you're kind of like guessing right now, I think that kind of the investors that are putting in the money right now, that first wave of insurtechs that have reached the scale, kind of that ship already sailed. So I would think about what is going to be that outsized bets that is going to deliver for me. I would think about either kind of a full stack insurtechs that are able to kind of own a bigger chunks of that experience, or I would think about something that's more like a kind of a far outlier to say about like something in the DeFi space that is parallel finance, basically, to say that something really innovative is going to happen. We know that a lot of things in crypto have taken off, but there hasn't been anything in the insurance space that have even come close to touching it. So it feels like there is a widening gap in terms of that space where many crypto investors, crypto startups are looking for insurance, and all the insurance companies are saying, you know, absolutely will not touch the space. So it feels like there's opportunities there, obviously very risky and very different. But I think this is where there could be some interesting bets that can be done to kind of create that outsized returns for the investors.
And would you, from an investor point of view, if someone said, let's go full stack, and we're out competing with existing insurers on, so would you be worried about customer acquisition costs? Would you still fund a B2C play? Would it have to be, do you think that someone coming to the party now is going to be able to convince Grab against the likes of you? Would that be the kind of B2B2C play? Would they have to work with insurers, with existing channels? How would you, what kind of answers would you look for, knowing what you know, that you know you would resonate with you? Because I think, yeah, Lemonade has shown that they can acquire customers, haven't shown that they can grow to homeowners. What they've shown is that they, I don't know, win contents insurance customers in Germany where it costs 60 euros annual premium at 120 euros CAC. Great, yeah. And then they moved out because this is like really bad business. So I would question how successful that was if you see public markets treating some insurtech stock, to be honest. Doesn't have to be the problem of VCs, although we've also learned, you know, you then need to be locked in, you cannot just fire sale. But I guess the customer acquisition cost thesis is my main concern, because I think you can get anything on a digital platform if you know your space. I think we've shown that it doesn't need to have 20% admin in IT. Absolutely not. What's the customer acquisition equation for you?
Yeah, I think it's a good question. Again, I don't think that anybody has a very clear answer for it. It definitely feels right now that with the existing set of products, it is still you're competing in a very kind of a red ocean, right? There's no, I would call it like a Revolut that excited people to a degree where they're going to say like, okay, I'm going to switch, and you know, all of a sudden you have 10 million customers. So hasn't been really kind of that maturity, I would say, or room for innovation potentially as well. So I think there is still search for it, but it feels naturally that there is a move towards kind of a full ownership of the customer experience, and the product, and that's really where you only can do it when you're an insurer. If you're a broker, for example, you play in such a niche space that you're still going against the customer acquisition cost, but then you're not able to do anything on the product side. MGA has more room, but as you kind of expand that value chain, there is ability to product innovate. And I think that's naturally where things will start to head, is that if you're selling exactly the same product as everybody else, and your only differentiation is the better app or a better website, then I think it's a very, very vulnerable space. But I think there's going to be new types of products, like unbundled products, products that are very catered to, or based on the data that, let's say, you're able to access based on the open insurance APIs, open banking, all this kind of stuff, that the data is starting to become more widely available, obviously kind of with the right controls in place. But with that, I think you're starting to be able to cater and customize insurance in a lot better ways. So rather than kind of keep it as a very monolithic process. So that's the thinking in terms of future. So I don't think we've seen that, how that plays out yet. But I'm still quite bullish on the Lemonade. I think the guys have the right ideas there. They have the right approaches, but I think that there is definitely a lot of constraints for them on the product side. So they're still stuck in between kind of reinsurance and the regulators and all those kind of things that limit the kind of stuff that they can do. But the positive thing is that once you're able to reach a certain set of kind of a scale and the customers, then I think it opens up a lot of opportunities for you, both from the exit perspective as well as from the growth perspective.
Cool. Conscious of time, it's almost been an hour. Time flew. Tom, you've been charmingly quiet. Any?
I listen. No, I just listened, and you were diving deep into the whole space. I just, let's say, one remark. The problem is nowadays that we talk a lot about valuations, and we don't talk about the real numbers so much. So about customer acquisition costs or revenues, etc. So even if you take Revolut, all those neobanks, they still have to show that they earn money. So, and this is the game in the past, has been the game as well. So you can enter a market like UK car insurers entered Germany in the 80s or 90s, but you still have to prove at a certain point that you earn money. But at the moment, we don't look into those numbers. So I think, especially in Asia, with a lot of new customers you acquired, you have a very good basis to develop the models further, which is also not new, like the Japanese who started to produce cars in the 50s, etc. And then you evolve further, but yeah, it's still to be seen. Let's say who's still there in 5 or 10 years time. So
when the music stops.
Yeah, but let's say the example, let's say in Germany about Lemonade is something which is only discussed in the German market, but not so much beyond that. And at a certain point, if you have a lot of money and you are able to buy other companies like Metromile or something like that, at a certain point you don't even exactly see what are your customer acquisition costs. Did you get those customers by your high valuations, etc., or is in the core of the business, let's say you generate profits because revenues are so high and you're doing so well. So I think it's still to be seen who will succeed in the end. And it also can be, let's say, if you have a lot of innovation, that the companies who started, if you take, for instance, car manufacturing, there were a lot of companies producing cars when the car was invented. But then, let's say, 50 years later, there were different companies, and I think this is exactly happening in the insurtech space at the moment.
Absolutely, I think that you make exactly the right point, and that's a very positive thing that's happening, because the more things are, I guess, the more money is coming in, the more entrepreneurs are joining, the bigger things that are happening will inevitably create and spur that innovation. So I don't necessarily think that it's a bad thing that, you know, car manufacturers die off, or parts of, you know, startup ecosystem don't thrive. That kind of a natural recycling of talent, capital, all this kind of things that come with that, I think it is actually a very, very positive thing, because it just creates the momentum, it creates rejuvenation of it. So I definitely take your point about, like, you know, there's probably disbalances in terms of kind of where the capital is going and why the capital is going there. But I think overall there's a positive direction in terms of kind of where the insurtech is pushing the insurance industry. If we kind of even compare like 5-6 years ago, right? Nobody was talking about embedded space. Everybody was just like, okay, we're going to just create a slightly better website and we're going to call ourselves innovative.
But it's also, let's say the discussion is often very often dominated by B2C companies, and in the end you see B2B companies succeed. So if you take, for instance, the fintech space, I'm much more a big fan of Adyen than of Revolut, if I just see the real numbers. But it's B2B, and the B2B space is much more difficult to discuss than the stuff which is around. And I think that this will just take some time. But it's the embedded space is a little bit in between.
But I think, and George, I think that was actually a good side remark that you've done. And it's, you know, it's one thing to kind of go, ha ha, lemonade, stock goes down, boo-hoo, everything's, you know, you suck. Which obviously is a very short-sighted view, because even, you know, what happens, lots of capital attracts lots of talent, lots of things validated. And this disseminates back into the ecosystem. This disseminates back into second, third generation of entrepreneurs who iterate on certain sub-segments, but it also creates a different talent pool for anyone driving change within an insurance company, because you'll then go, well, not the entire playbook work, but parts of it really work. Now, if I were to do this within Allianz, right, we can have a new blend. And I think that is, if you're looking at insurance as a social good, and, you know, 5 trillion every year, it's going to triple, especially in your neck of the woods, you know, by 2040. And there's no one can say that it's great that we'll just have leakage of 20% every year, just going nowhere, right? Other than if you like, I don't know, IBM mainframe licenses. I don't know, maybe that's great, maybe it goes somewhere. But I think that's an underappreciated form, because there's smart people, there's talents, there's partial solutions, and it just keeps the wheel churning. And I think that there's something that they'll persist. You know, it won't be the same as the railroads, you know, but there's something there. And I think that talent dissemination is a real key point that is often overlooked. And, you know, thanks for pointing that out. I think that's really good.
Cool. Yeah, happy.
Cool. Now, conscious of time, we're going to wrap this up, gents. George, is there anything that any of our listeners, viewers can do for you? Anyone you'd like to reach out to, or anyone you really don't want to get a message from?
I'm happy to keep in touch with everybody. I think it's very interesting to exchange ideas and kind of learn from each other. Recently, I also had a conversation first time with Latin America, for example, with the Insurtech folks there. That was like kind of eye-opening as well to see what they're doing. So I think every region has its own learnings. And the more we have that osmosis of ideas, osmosis of information, the more it will help us to avoid the mistakes or accelerate certain things. So definitely happy to hear from anybody who has any good ideas or suggestions. And I guess as hopefully we'll see each other after the COVID moderates. Really looking forward to making a trip to Europe one day and kind of having a chance to interact with folks face to face as well.
Likewise.
Thank you very much.
Tom, George, have a lovely day. It was a pleasure talking to you both. Take care.
Thank you. Thanks. Okay.